Despite unfavorable market conditions, OMV delivered a solid performance, proving the value of its integrated business model. As a result of the coronavirus pandemic, demand for crude oil and refined products plummeted. At the beginning of 2020, crude supply rose as the OPEC Plus states failed to agree on production cuts. This development sent the Brent price into freefall, and it bottomed out at $13 in April. Subsequently, production cuts were announced, and a gradual return in demand led the oil price to increase to around $40. In the first 9 months of 2020, the average Brent price stood at $41 per barrel and was 36% lower than in the same period of 2019. The clean operating result in Upstream amounted to minus 39 million euros due to a 21-year low in oil and gas prices. In the Upstream business, total oil and gas production underwent a slight decline to 460,000 barrels a day. This was mainly due to the production shortfalls in Libya, which were partly offset by production growth in Malaysia. Sales volumes also decreased, mainly due to the fact that no Libyan oil could be sold to the market. Production costs remained at a low level of $6.7 per barrel. Due to reduced oil price planning assumptions, OMV Upstream incurred non-cash impairments of 1 billion euros pre-tax in the third quarter. In Downstream, OMV achieved a very resilient clean CCS operating result of 1.1 billion euros, driven by an improved gas and retail business result. Refining margins decreased because of weak global demand and rising inventories. Substantially lower middle distillates and gasoline cracks put pressure on the refining margin. Total refined product sales declined following the global pandemic and the travel restrictions imposed. While aviation sales volumes fell sharply, retail sales volumes decreased to a lesser extent and recovered in the third quarter. Gas sales volumes increased, driven by improved sales in Romania, Germany, and the Netherlands. In July, OMV presented new and more ambitious climate targets, whereby OMV aims to achieve net zero emissions in operations by 2050 or sooner. In Downstream, the OMV Schwechat refinery has implemented multiple energy efficiency measures to reduce CO2 by 40,000 metric tons already this year. Savings of 60,000 tons of CO2 are expected from next year onwards. In OMV Upstream, the construction of what will be Austria's largest ground-mounted photovoltaic plant is close to completion. After the final phase of construction, the solar park will have 45,000 PV modules and save more than 10,000 metric tons of CO2 per year. The first 9 months marked an extremely difficult environment for OMV, but the company held up strongly. Following the successful closing of the transaction to increase OMV's stake in Borealis to 75%, OMV will become a global gas, oil, and chemicals group. Its integrated business model will extend from the wellhead to high-quality plastics and will reposition the group for a low-carbon future.